He's gone for a week or two here to start.
I don't know, question. There's a time I moved to. No, that's great.
All right. Let's get this party started, proverbially speaking. How are you guys?
Such a good trade.
So last time we talked about income statement, right? And what does the income statement really representing? It's like how much the company is making, right, over some time period, right? Today we want the report we're going to talk about is a statement of owner's equity. What does equity mean again?
Their share of the company.
It's like the value of the company, basically, right? The equity is all the stuff in the company that has value, whether it's, basically the assets, right? And then the second report we're going to do is preparing a balance sheet. We'll talk about what that is. So 2 reports this time. So a statement of owner's equity. So this document reports the changes in the capital account for proprietorship for a period of time. Remember that we have the capital and the drawing were 2 of the accounts in our ledger for the owner, right? Okay. Account titles are obtained from the account title column in our ledger or from our worksheet. Account balances are obtained again from the worksheet's balance sheet column. So again, remember that worksheet had like 3 sets of debit and credit columns, right? One of those pairs of debit and credit columns is called balance sheet. So this is like a snippet of that worksheet report that we had prepared in chapter 6. Okay. Now notice that they've edited out the first 8 rows and then rows 11 through 19 because they're not relevant to what we're doing. Okay? Okay. So to prepare this balance sheet, we get all the information we need from the worksheet. So we start by titling our this form with the name of the company. We call this a statement of owner's equity. That's the name of this particular report. So it's the 3rd different type of report we talked about. We have the worksheet, we have the income statement, and now we have the statement of owner's equity, or the 3 different reports we talked about. And then just like each of the previous reports that we've done, you have a date that the report is covering. Everybody feel good on the heading here? No big deal. So to prepare our owner's equity statement, the work we need, or the information we need from the worksheet. So we're going to have the beginning capital. So that's the amount of money at the start of our capital, or at the start of the month in our capital account. In this case, that was $2,000. You scroll back to the previous page, you see that Michael Delgado capital is $2,000. That was the start. And then we include the net income that would have come from the income statement report. Also included on the worksheet. Notice the last row there, row 21 has the net income. And then we have the the drawing, so that's the money that's come out. It's okay. So we have the capital, how much we had to start. The net income, how much went in. The drawing, how much the owner has pulled from the till. So that 2112 is the difference between the net income and the drawing. So 3,162 minus 1,150 gave us the 2012. And then we draw our single line, add down, and then draw our double line to give the indication that we're finished with our report. Is everybody okay with how we generated the numbers here? So again, the capital account value at the start, net income minus the drawing, this money came out, and then that gives you the current capital value for the account. Okay? Again, remember capital is basically the same as money in the bank, right? You get $2,000 at the start, this much came in from doing business, we pulled this much out for, like, I'm the owner, I'm taking money out because I need money. Not doing this for nothing. And then whatever's left then is how much money is left in the bank. Does that feel okay? So when a business has a net loss, a current capital is calculated. So we have the capital account balance minus our net loss minus the drawing gives us the current capital, right? That's the same as whether there was a net loss or a net profit or net income, right? It just, the difference is you're adding for net income as opposed to subtracting for net loss. Is everybody okay there? So again, on the previous slide, net income is a positive number. If it was a net loss, that would be a negative number, right? Everybody's okay? That's all we're trying to illustrate there. So let's take a look at a portion of our worksheet. So again, notice that see the white breaks in there? That we've edited out parts of the worksheet that aren't relevant to us. Notice that we've removed all the columns other than the balance sheet columns. See how the columns, they're labeled 7 and 8. We're missing 1, 2, 3, 4, 5, 6 before it. And then the columns after it, I think I can't remember if there's another column after that. Probably not. I see the numbers, the row numbers on the side. And as well, we edited out some rows that we didn't need after the drawing account. Notice that we jumped from row 10 to row 20. Again, in the interest of like consolidating this onto a slide, we edited out some of the rows that would have been on this worksheet. Everybody's okay? So again, any row that doesn't have a number in that balance sheet column doesn't matter to us. Everybody's good? Okay. So, what are we going to need here? What are the numbers that we need? We need the capital, the drawing, and the net income. Yep. So again, we get our account titles, we pull the balances from the worksheet balance sheet columns. So we title, the name of the company. Oh, we're doing a balance sheet now? We're doing a balance sheet, excuse me. We transitioned into a new report, okay? Owner's equity is done, we're doing a balance sheet now. My apologies, I missed that. Everybody's okay? Sorry. So to create the balance sheet report, again, headed the same way. The only difference is that the name of the report is now a balance sheet instead of owner's equity. So on our balance sheet, we have two columns. We have a column for assets and a column for liabilities. So if we go back to our worksheet that we looked at before, we have assets and liabilities listed here. How can I tell what are the assets? They were in the debit column. And how can I tell the liabilities? They were in the credit column. What two numbers that are in the debit credit column am I not worried about? Back and show you again. Capital and drawn. Notice those are not included here on the balance sheet because they were included on the owner's equity report. Everybody feel okay? Okay. So again, we title the account, or title the category assets. We write down the account titles and the asset amounts. We write in liabilities for the title. We copy in the account titles for those liabilities. We write down the liability amounts. And then we have a single rule, and we total up those liabilities. Everybody feels okay? And that'll do it. So our completed worksheet here, we have our assets. Okay. We have, including our owner's equity report here. So we have the account title for capital, capital amount, single rule. We total up our assets. We have a new final title here, total liabilities and owner's equity. How are we getting that number of 4,237? Adding capital and liabilities, right? Just like it says, total liabilities and owner's equity. And notice that if we check the total assets and the total liabilities and owner's equity, what do you notice between those two numbers? They match. Will that happen every time? If you've done things correctly, yes. That is our double check. And if that works out and they both work out, we double rule it to say that this worksheet is finished. Or this report is finished, I should say. Does that feel all right? So the balance sheet includes some owner's equity, just so that we're able to double check that our assets and liabilities match. The four sections on our balance sheet. We have a heading, we have assets, we have liabilities, we have owner's equity. If we go back to our balance sheet, the title, the asset section, the liability section, and the owner's equity section. Everybody see them? The formula to calculate current capital is the capital account balance plus net income or minus net loss minus drawing account balance equals the current capital. So starting money And then plus or minus any money made by doing business, minus the money the owners withdrawn for their own personal needs, gives you the current money in the bank. How do you guys feel? Yeah, again, I think that these reports are considerably easier than the worksheet report that we were doing last time, or in the last chapter. Let's fire these guys up. And want the work together.
Mr. Boyd,
Yes, sir.
I have a question.
Okay, what's up?
First 7-1,
Yes.
did you add new lessons like standard notes?
I did not mean to if they have shown up.
So we don't have to do them.
They do not have to do those.
They're not on 7.2 this
Okay.
year. It was just 7-1.
Okay. Yeah. I'm still trying to get the handle of
Yeah, no.
doing stuff. So yeah, feel free to please ask me all the questions here. So if you wanted to follow along while we do the work together, I invite you to do so. It says preparing a statement of owner's equity and balance sheet. Once you've completed your entries, click grade this step to receive a grade for your work and activate and advance to the next step. It says prepare a statement of owner's equity for month ended April 30, 2000, whatever. The first step in preparing any statement is the heading. Fill in the blanks for the statement of owner's equity for all pro painters for the month ended April 30 of the current year. The current year as 2000-, do not abbreviate the month. And then step 2, use the worksheet of all pro painters to prepare the body of the statement of owner's equity for month ended April 30, the current year. Okay. So what am I going to put in this first line of the title?
All pros.
You got it. And in the next line, yeah. Good. And the last line here in my title, yeah, for month ended in whatever the date is on the worksheet, right? Okay. Now, my first entry should be the capital account, right? So I'm going to go scroll down till I find that. So Dwight Sundin, and we want the capital account on the 30th, or I'm sorry, the 1st, I believe. What's up?
No, I was just confused. Like, which one we're doing.
Yeah, I think I want that one,
Which one?
the 1st. You want the capital from the beginning of the month. And then we have,
3,500?
yep, 3,500 from it. And then what's our next item on our report? Do we do the drawing or do we do net income? Which one came first? Do you remember?
I think it's
I thought it was also. So our net income was down at the bottom. What's that? 3730. And then we have the drawing account next. I gotta spell more of this, huh?
Yeah, you gotta talk about what
That stinks.
it also has 700. Whoa.
It
literally says
less. Wait a second.
Joey pointed that out. Like you have to put less.
Oh,
I don't know why.
that's weird. Less. All right. That wasn't on my sheet. Thanks for figuring it out. 1,200. Okay. And then what's going to go here?
Well, no, somebody else has mine.
2530, right? The difference between the net income and the drawing. Correct? That's the right value? And then what's this last title?
We're supposed to add it up. Hopefully, it's capital for 6,030.
Okay. $6,030, you said?
Yeah.
Oops, got 5,000. Try it again. Okay, let's see how we did. Oos. Well done, crew. All right. Balance sheet items. So we have to categorize what each of these accounts is. Cash, asset, liability, equity, neither. Petty cash. That's an asset. Accounts receivable. Supplies. Prepaid insurance. Account payable. Capital. Drawing. Income statement. Sales. That's a revenue. So that's neither for our purposes, I believe. Advertising expense.
Liability. Oh, no.
That's an expense, not a liability, right? So I think all these guys go neithers.
Oh.
Let's check.
The white sun being drawn. That's wrong, I guess.
Oh, what is the drawing? Is it?
I'm not sure. I think it's a liability.
It's a neither? Okay.
Really?
Okay.
Wow.
That would have been my guess if it wasn't an equity.
Really?
Okay. Is everybody all right?
Yep.
Learning together? All right. On to this one. We're doing our balance sheet. So it says all Pro Painters has completed its worksheet and income statement, is now ready to prepare the balance sheet. The first step in preparing a balance sheet is the heading. Fill in the blanks for each row of the balance sheet heading. Blah, 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 blah. Use the worksheet of all Pro Painters to complete the balance sheet for 30 of the current year. When listing accounts on the financial statement, follow the order of accounts on the worksheet. Okay? All right, let's title this guy up. What's the first line of our title? Oops. Oh boy. I did something there. That's not the button I want. Okay. And then the next line should be? Yes. And then the line after that? Yep. Okay. Our first drop down then should be assets. And our second one should be? Okay. Our first asset we list is? Cash. For how much? $47.50. Okay. Let's go to our second asset. And oops. Petty cash. Okay. Ugh. And for, what was that, $75? The next one should be accounts receivable, Mackerman. Or, yeah, Mackerman. Macman in a minute. For a minute. What's that, 825? And our other accounts receivable, so that's Woo. Woo. Which is 715. And then we have supplies. Everybody's good with where I'm pulling these from, right? Oops. And that's 250. And then we have prepaid insurance. And that's 480. We have total assets is next.
The supplies and the prepaid insurance are adjusted.
Oh,
Like the adjusted prices.
thank you. We did, I should have done this so we can actually see. Yeah, thank you. So everybody notice here that Kaylin, I wasn't looking to talk to me. I was guessing. There's 3 girls right in a row though, so it's like, ooh, whose voice was that? So notice that there was an adjustment to both the supplies and the prepaid insurance. So I don't actually want the 250 and 480. I want the 110 and the 320, I believe. $10 and the 320. Thanks. Okay. All right, let's do our liabilities now. What are our liabilities? The 2 accounts payable. So Belmont for $275, and then the other one is Lurgant. Okay. Whatever, guys. I always wonder, are these like real businesses somehow that they have? What do you think? So total liabilities is next. And then we have owner's equity. And that's going to be the capital, right?
Yeah, but it says the number's wrong.
It says
You
that.
have to add up all the assets and subtract the liabilities from it. That gets you the owner's equity.
So I need Dwiggett, Sundin Capital. So what number goes here? You're saying,
Yeah, it's like 6,030.
oh, from the last sheet, right?
Yeah,
That was the owner's equity from the previous sheet that we had done. Okay, and then this is our,
what's the month? Or the date though? 1,097.
It's James.
It says April's wrong.
it's,
Yeah, it's 797. On the
well, let's hit,
it says it's wrong too.
let's hit, what's the matter?
Check the answer and you'll see.
Okay.
You just put April for the.
Oh,
You don't put for a month.
It's just a month, it's just a month.
Yeah.
let's see.
Right now.
Okay. What do I have to do here to get into it?
But
You think rates, 540 is the rate.
Oh, didn't have the check option. Whatever, going on.
Oh, wait, can you explain how you got the 6,030?
Yes, so the 6,030 was
and like I
the owner's equity from the equity report that we just generated. Okay. And here's our sheet.
Tommy, it's negative. When you put negative, autofill.
All right. So our total assets, if I add up all that stuff down, what do I get? Who's got their calculator?
6,795.
6,795. Okay? And if I add up those liabilities,
765.
765. And then if I take 765 plus 6,030, I do get 6,795. Is that because I said 6,7? Or is that because they matched?
So just like,
Yeah, I'm still on that.
You're still on 6,7? I read an internet story that says 6,7 is now dead.
Oh, it's supposed to be, but I still.
it'll never die.
behind.
Well, my 6-year-old daughter is interested in 6,7, so that's how I know it's not cool anymore.
Yeah.
Right?
I'm
It's like
still gonna drag it though.
when first graders and kindergartners are getting excited about 6-7, it's like, okay, this is now past the point of being relevant and being cool. It is now dead as disco. All right. Do we feel good about what happened here?
Yeah.
Okay. I'm gonna stop talking. Let you guys work on.
Next class.
No, we'll have. So this does complete the chapter 7 topics. That's it.
That's gonna be the easiest.
So we're at next class?
No, don't say that.
So
You do
next
that.
next class will be the review day, and then we'll see how that goes. And I would hope we can do the test on Thursday next week.
It's like, it's not.
You said it's pretty much the same thing.
It's the same class, Joseph. Obviously, it's simple. It's not the same.
That's like saying you're gonna have
You guys are over there sliding right now. I don't think I will go over this side. Yeah, sorry.
Okay, so yeah, Joey, I think that or I'm sorry, Tommy. Let's plan on next class the review day, and then the following class the chapter 7 test.
That's perfect.
I figured if we hit this early, we'll be off sequence of when all your other tests are. Because always the first testing day of the semester, it's like everybody has, all your classes have a test on the same day because they're all kind of on the same.
Jeez, dude.
Yeah, I know.
Oh,
It's the same.
nah.